Good morning and welcome to the daily market update from FP Markets, coming to you live on Christmas Eve, and happy Christmas Eve. Coming to you live from our Sydney head office. All very quiet out there in the Sydney CBD, but certainly not quiet on the markets. And once again, stock markets continue to rally despite sort of cases of Omicron continuing to increase across the globe. And I suppose investors are not getting too scared with it. The severity of the virus doesn't seem as bad as prior variants, and on roll the stock market. So, another good day. Nasdaq up, and this is the Nasdaq chart here, and we're sort of targeting those recent highs. We're just sitting around there, and then targeting that historic high that we saw earlier in the year. Nasdaq up 0.8, S&P up 0.6. Australians ASX 200 has opened up 0.62 at the moment. So things all looking pretty rosy, and sentiment pushing forward. And talk of the Santa Claus rally that we traditionally see in the last week of this last 5 trading days of December and the first few days of January seem to be coming true. So all those Santa naysayers are clearly wrong at the moment. I think the most important thing is that at the moment the market is highly focused on the spread of Omicron, COVID-19, and how it's going to affect economies moving forward. So I suppose there's clearly some optimism in the air at the moment, but maybe some cautious optimism as well. And definitely traders, investors are looking at Newswise and analysing every little print that comes out to see if it's going to get better or worse. And you will see the market reacting to that, and that could see an increased volatility, especially for the rest of today. Liquidity will start to come at a premium, especially when we hit that New York session. And next week as well, we are back open, of course, on Monday for the markets. But traditionally, sort of that interim period between Christmas and New Year's, liquidity does come at a little bit of a higher price. Now, we did get the only data points, or the only real major data points of the week out overnight, out the US and out of Canada. So let's skip over to CAD. So dollar CAD, currency's still appreciating against the dollar, as you would expect in this kind of environment. CAD GDP numbers came out, and they came out dead on expectation. Expected up 0.8%, and that's exactly what we got. Got some interesting data in Europe as well. It's more second tier stuff, but German import prices expected to come out up 0.9%, came in at 3%, which is obviously a lot higher. So interesting. I suppose that sort of backs up the inflationary rhetoric that we're hearing across the world at the moment. I suppose really for me the key pieces of data we got out were out of the US last night. So the core PCE price index, which the Fed keeps an eye out, expected at 0.4%, came out at 0.5, so only 0.1 higher, but certainly a key indicator. Core durable goods orders as well, month on month expected 0.6, came out up 0.8, and the durable goods overall number expected 1.9% up, came out 2.5. So all positive numbers still coming out for the US market. Now, don't forget, most of that data does come from before the Omicron variant really got going, and before we really knew it was in its existence. So that's all obviously the monthly numbers back to November. So keep an eye on that, but it probably probably enforces for a lot of people the lines that we've heard from the Fed recently. So as I said, stock market's up. We've seen currencies appreciate strongly as well. I'll skip through the currencies very quickly. It's the same trend we've seen for the last few days. So Aussie continues to grind higher and higher, sitting around 72.35 at the moment. And while this positive sentiment continues to exude through the market, expect Aussie to continue to move to the top side. Experienced punters will be concerned that if we do start to see a bit of volatility, Aussie could be one of the currencies that falls the hardest. Kiwi, once again, sort of, it's probably not rallying as hard as the Aussie, and you can see that there because we've had a really good rally in Aussie Kiwi from these lows down around 103 in this quarter, and we're all the way back up to 106. Always an interesting. A lot of the pure Kiwi traders will generally look at Kiwi against the Aussie rather than just against the greenback. Sterling, now that's been, and I think we talked about it yesterday, it's probably been the biggest mover on the year for us in terms of getting decent moves and getting some real nice reactions and trading well from a technical perspective all through 2021. And last night was not a disappointment either, and I'll sort of compare it with the euro on the next chart we go. But look, good break over the last couple of days. We got up to that 133.50 and then bang, went up again all the way to highs up at where we got 134.34. So it looks like a little bit of interest up there. We're back to 134 the figure. This sort of revolving around the big figure would tell me there's probably a little bit of options interest there as well. But sterling still, and I've said it before, still one of the most popular currencies that we're seeing coming through our books, and quite rightly so. So keep an eye on that, like a real big rally off those lows down around 131.70. Top side now, I think obviously we've got some highs just overnight around 134. 35-ish, but keep an eye on that cable. Probably, as we've seen such decent moves out of it, if we do start to see volatility pick up and liquidity, as I said before, will start to thin, especially this afternoon, and especially this afternoon in the New York time zone, then you could get some nasty whippy moves in the sterling. Euro, and I think I sort of went through this yesterday as well. You can see here on the cross, like euro sterling back down to 84.50. It's traded quite a nice range for a while, like for all of this month really, and like really failed to break above what 113 sort of 65 or 80-ish there. Once again, what 113, help me out here, high there 113.60, and it's just traded this range really nicely, and it's sort of capped out around 113.50 again overnight. So euro just fairly quiet, but a great trade range trading opportunity. So as I said, sterling probably you're getting the bigger moves and the better break trading conditions, but euro sort of holding in there really nicely on a range. Dollar yen continue to creep higher, not unexpectedly given stock markets moving to the top side, and we sort of covered CAD a bit. As I said, that data for CAD GDP number came out pretty much as expected. A little bit of a drop back down, but still sort of sitting for me very much mid-range. A little skip across to the Swissy, as we talked about before, sort of very much a nice and whippy currency. I'll take that trend line out of there. And as you can see, we're squeezing into this pennant at the moment, and you can see it on a tighter scale here on the hourlies. Expect there to be some action around about this 91.50 level down here, and really topside resistance. Haven't got anything till 93.40, and then that recent high at the end of November at 93.75-ish. Just moving over to my bits and bob page, did get a break higher in the in Bitcoin. Now, as I said, like struggling for fundamentals on all the cryptos, as we know, but that's a little break, and that trend line was being adhered to very nicely. So maybe it does open the way for a move back up to 60,000. But it's a tricky one, as we know, and with volatility is going to increase in all markets, then certainly the cryptos are going to be experiencing some. Gold sitting nicely again mid-range. It's bounced off those levels a few times this year, and as I said, I'm really looking, I think, at the start of 2022 before we get a break out of that. And oil just continues to sort of maintain these levels just under $75 a barrel. Keep an eye on that we could see some big volatility, and really something like oil, we will get a lot of volatility if we start to see bigger news lines coming out with regards to the Omicron variant and how it's going to affect travel. I mean, it's a massive thing here today, with thousands and thousands of Aussies trying to get tests done so they can get on planes and go and visit family for Christmas. And I'm sure it's the same across the world, and there is a bit of chaos out there. Chaos does tend to create a bit of volatility, so keep an eye on that. As I said, I find it surprising that the markets, I love to look at the micros and look out the window. There are not many people around. Most of the restaurants, pubs and clubs and stuff in Sydney are closed, and I think it's, from what I'm hearing talking to colleagues around the world and other traders, it's very similar in most capital cities. So that will hit numbers, right? It will hit numbers as we come through to next month, and certainly if we see an escalation in the numbers and the escalation in hospitalizations, I think there could be some downside for stock markets. Fingers crossed we don't get that, and the market's certainly more optimistic probably than the average man on the street. And we've got to trade what we see. But I think that's probably my wary warning as we go into this Christmas trading period. Anyway, that's pretty much it from me for today. I think it is a buy dips environment, but it's sort of cautiously at the moment. Liquidity will be, and I know I've said it about 3 or 4 times, but it is a real big warning at this time of the year. Liquidity does become a little bit whippy, so adjust your risk management protocols and your capital management protocols to account for that trading over this period. But there will be some good trading opportunities, and we've seen them all over the last few days, as we've pointed out. So that's it from us. If you need anything from FP Markets, we're open all the way through. I think we're just closed pretty much for Christmas Day and most of Boxing Day, but then we're back in. Anything you need, please do come to us, and please have a very Merry Christmas. And I'll be back next week to wish you a Happy New Year. Thanks very much. Bye bye.